In this video, I'm going to teach you a stupid simple trading strategy that has a very high win rate, and it is really simple, guys. Like, you can follow it. Like, even my 94 years old grandma can follow this stupid simple strategy. So this strategy is very easy and repetitive. It appears every single day. You're going to get at least one setup per day, if not more, and it only uses one time frame, and it requires no higher time frame analysis. That means you don't need daily bias. You don't need to look at the higher time frame order flow or the trend, right? And it is boring but extremely profitable. So when I'm going to give you guys examples, I'm going to teach you the strategy, you will know exactly what I'm talking about. So here is the strategy, very simple. All right, so we're going to be using only 15-minute time frame. Now you can use above 15-minute, but I would not go below 15-minute time frame. Okay, and this strategy works with every single pair, every asset, even crypto, if implemented correctly. And if you watch till the end, you will know exactly how I implement this. And it is a one-step model. It only requires one step, and when that step happens, you take your entry, and you can get big risk reward ratios with this trade: 1-4, 1-5, sometimes even 1-7 if the setup presents it. So the strategy is simple. What you want to do on the 15-minute time frame is mark out liquidity, right? So liquidity could be lows and it could be high as well. All right, now this liquidity has to form within the same day, so it cannot be from a previous day. All right, and this works with every session, so it doesn't matter if it's Asia, it's London, or New York, right? It works for everyone. So if you are based in US, right, you can trade this. If you are based in India, you can trade this. If you're based from anywhere else in the world, you can trade this strategy. It's very simple. So first thing first, you want to mark out the liquidity level, right? Now the next step is you will waiting for price to sweep out that liquidity, right? So let me just create this right like that. So price goes down, right? And let's say we have a wick like this, okay? And the body closes somewhere around here, okay? So the strategy is when we sweep the sell side liquidity, in this case, the sell side liquidity is the low, the very first candle that sweeps that liquidity must close bullish when it sweeps that low. So over here, we had a low, price swept the low, right? And then we closed bearish. Now, similarly, what you would do in this case, when we sweep out the high, in that case, that would be buy side liquidity, right? I want the very first candle that sweeps liquidity to wick above it and then close bearish, okay? Now, this is what I called time-based volume, okay? So what I mean by this is, let me just turn this into green, okay? So in this 15-minute candle, right? In this oh my God, that is terrible drawing. But in this 15-minute candle, I want to see all of these criterias met. And the number one criteria is liquidity sweep. Number two is wicking above. So we wicking below and then going up. So we go up right after taking out the low. And the third step is that we close bullish. Okay, this is very important. It has to happen, otherwise the setup will not work. So we sweep the low, we wick below it, and then we close bullish. That is important. Now, when that happens, all you're simply doing is taking a long position and you're putting your stop right below the low over here. And you can go for 1-2 risk reward ratio, right? And at 1-1 risk reward, you are going to go break even, and you can take a partial as well. Okay, so 1-1 is where you go break even and take a partial, and at 1-2 you could close out your entire position. Now, if you have a very strong draw on liquidity to the upside, you can target that as well. But it requires no daily bias, guys. Whenever this setup is presented, you are allowed to take a long position. And the reason why we take a long here is because time-based volume, okay? So in 15 minutes, we had strong volume that swept sell side, but we saw buyers coming in, and those buyers closed the candle bullish. All right, now ICT says there's no buying and selling pressure. I disagree with that. Now you can blame me for that, but I trade whatever works for me, and I put behind some logic behind it because there are definitely buyers and sellers around here. I've seen the Orderflow apps, and there's definitely buyers and selling pressure, okay? So what really happens down there is that sellers, they try to push the price down, but there is a very big buy limit order resting around this area. So all the aggressive sellers who are selling the market, right? They try to push the price down, but the big buy limit order comes in, which is passive buyer, and it pushes the price way far up. Now, what that indicates, that price wants higher prices, right? Now, this could be buy side liquidity up there, and that's what you can target. Now, ideally for me, I go for 1 to 2 risk reward. And similarly, what you would do in the short case scenario is, one second, is that you basically take a short position, right? And you put your, oh my God, dude. So that would be a long in this case. Then you would put your stop right above the high, and then you can go for 1 to 2 risk to reward ratio. Simple as that. You go break even at 1 to 1. And that is pretty much the entire strategy. Now, there are some key rules that you have to follow, okay, to avoid unnecessary losses. And I'm going to teach you that right now. So let me just turn this into a green candle. All right. So this is very important, okay? So let's say that you are in a trade, right? And you are in a long position. But what you also see is that we have, let's say, this candle right here, which is like this. And we have a wick above this level. And we have another high up resting around this area. Now, what I don't want to see is when we are already in a long position, right, from this low over here, what I don't want to see is that, let's just do this, okay? We close bullish, and then we have another candle opening that sweeps out that high over there, right? And it pretty much closes bearish. So when you have contradicting setups where we swept the low, we closed bullish, right? Now that would be your entry, but then price also swept the closest high, and then it closed bearish, ended up closing bearish. In that case, I would reverse my position. So I would close out my long position, right, at a very like tiny loss here, which literally just doesn't matter, right? It's a very small loss. You'll not be able to even see it in those numbers. So what you do is just take a reversal and you take a short position instead. You put your stop above the high, and then you target 1 to 2 risk to reward. Now, here are some key rules that you have to follow. You can take 3 trades max per day, all right? You're not going to take more trades than that. And typically, for me personally, I only take 2 trades max per day. And I would suggest you stick to 2 trades per day because that would avoid you taking like more trades. It would avoid you over trading, revenge trading, and whatnot. This strategy has a 70% win rate. Above that, even that. And the beauty of the strategy is you can sometimes get 1 to 3, 1 to 5, 1 to 7. Sometimes, in rare cases, you get 1 to 10 as well. And this strategy is going to pass your challenge with ease. I'm telling you right now, it is just so simple, so stupid, but it is profitable. And when you go and backtest, you will see it by yourself. And if it works for you in the backtesting session, come back here and comment down below, and you will see how well this works. So now that we have the strategy out of the way, let me give you guys some examples, and then I'll end the video. But before I move on to the examples, there's one more rule. So the max liquidity that you can look at, so the oldest liquidity could have to be like the overnight session. So that would be after 12 a.m., right? You can look for liquidity that is resting during, that was engineered, but like during PM session, if that makes sense, and also during overnight as well. So after previous days, 12 a.m., you can start looking for liquidity levels. You can mark them out, right? And what I've seen is that the closest the liquidity is to the price action, the stronger you're going to get the setup. So if it sweeps like an older liquidity, there's a chance that it will not work out. But when price sweeps like closest liquidity levels, that's when you're going to see big moves. So let's move on to the examples now. All right, guys. So here is example number 1. I'm looking at gold at this moment. You can look at anything. You can look at NQ. You can look at Euro USD. You can look at crypto. It doesn't really matter. So over here during the Asia session, you can see that we had a low, right? So what happens here is that price comes down, it sweeps out that low, and then this candle closes bullish, right? So the very first candle that sweeps the liquidity, it closes bullish. So that is your indication that get into the trade and ride this move to the upside, right? So you would take a long right here, market order, you will put your stop right below the low, and then you would go break even at 1 to 1 risk reward. So over here, you can take a partial as well, but you can see over here that we have the high over here. That is a clear draw. Now, you could have targeted this, and that would have given you at least 1 to 2 risk to reward ratio, right? Very simple, very mechanical. You're not looking at extra stuff. And going up here, I can see no setups presenting themselves, except here we sweep out the low. We close bullish. And in that case, I believe that was a break-even trade. So if I'm not wrong, yep. At 1 to 1, you would have taken a partial, and that would have been nice. But then again, we have one more setup here. So you can see we swept the high and we closed bearish, right? So that is another short position. Now this would have unfortunately gotten closed as at break even as well. So we have taken 2 trades so far. We can look to take one more trade. And over here, what we see is that during New York session, we sweep out the low, and then we have a big push to the upside. So after we sweep out the low, the first candle, we close bullish, indicating that the buyers are back in control. That was just absorption of sellers down there. You put your stop below the low, and then you can see that we have very clean, like, hard resistance liquidity, right? And then you could have targeted the London high as well if needs to be. And you can see that this would have given you 1 to 3 risk to reward. Again, you would take one partial at 1 to 1. So you secure in some profits, and you're not like just waiting for price to come back and close you at a break even without giving you the juice. So that would have given you 3 risk to reward as well. So total profit for this day, you can see it by yourself, 1 to 2 here, and then 1 to 3, let's say here. So that's like 5R in one day. And this setup presents most of the time every single day. There will be a day where the setup will not present itself, and that is totally fine. You know, the goal here is to take the best setups possible and not like overtrade, not take like unnecessary trades. And this rule that I have right here, the time-based volume rule, TBV, that's what I call it, time-based volume, right? You can call it as well, TBV strategy. Fast SMC TBV strategy, if that makes sense. And then you can take this setup. Very simple, very mechanical, and very easy. Let's move on to the next example now. All right, guys, so here is another example. Now, on this day, we only got one trade, and that is totally fine, right? So over here during the Asia session, you can see that we had a high, and then we had a low, right? So if I mark out this high, and also we could mark out this high as well. Now you can see what happened here, right? Price went up, it swept out the high, but the very important thing is that we closed bearish right here. Now, when we see that price is closing bearish, that indicates that the buyers tried to push the price up here. There were a lot of buying pressure here, but then eventually there was a big sell limit order that pushed the price down. Now, what's that indicating to sellers is that, okay, the buyers are now absorbed here, so we can start selling it here, okay? That's what the logic that I use behind this. You can use whatever logic you want. You can say that this is algorithm, whatever. But personally, I call it like absorption of buyers. So you would take direct entry right at the closure. You would put your stop above the high. And you can see we have very clean equal lows down there. Now, you could have taken the profit full here, or you could have run it up to 1 to 2 risk reward. And then you could have taken your full profit around this area. Again, you can take one partial if you want to. I personally don't take a partial. I just go break even at 1 to 1. And then this would have given you 1 to 2 risk to reward ratio. Now I'm going to show you an example where you have to avoid. So for example, over here, we swept the high, but notice that the candle that swept the high closed bullish, right? So in that case, you wouldn't take a short position. You have to not take that setup, all right? And over here, if I'm not wrong, you can see that we had this low over here. Price swept the low with this candle, but we closed bearish, so we wouldn't take that as well. So that kind of helps you avoid these unnecessary losses. So let's move on to another example. Here is another example, and that appeared on Asia session as well. And on this day, we only got one setup as well, if I'm not wrong. Let me just check if we swept that high. Okay, we actually got two setups, so let me explain how this happened. So right here during the Asia session, you can see that we printed out this low here. So we have sell side liquidity, right? And looking at here, we did sweep out liquidity, but we didn't close bearish, right? We swept out this high over here, we closed bullish. And then again, we swept out this high, we closed bullish. But then we went down and notice what happened here, right? We printed a low, price swept that low, and then we closed bullish over here. Now that is again indicating absorption of sellers somewhere around here. All right, there was a big passive order, buy limit order that absorbed all the sellers, so price went up, right? So we want to get in with the volume. So time-based volume strategy, right? We enter right away. We put our stop right below the low, right? And when the candle is small, right, you're going to get 1 to 5, 1 to 6. But in this case, we had a big candle. And you can see that price went up to 1 to 2 risk reward with ease. You could have probably targeted this high over here. I'm not sure if price swept that high. Actually, it did sweep out that high as well. But that's where the second setup appears. Although, honestly, I wouldn't take this setup. It is because this is from the previous day's New York session, but it still looked kind of juicy, so I wouldn't lie, I would have taken this setup. But again, you got to stick to the rules. So that was the first trade, and if you had taken the second trade, I'm not sure if you got close at break even here. Probably got close out at break even, if I'm not wrong. Yes, that would be one partial with break even. And seeing this over here, I'm not seeing any setup. Maybe we swept out this low. Okay, we did sweep out this low as well over here, and we closed bullish. So probably that was another break even, if I'm not wrong. Maybe like break even one partial. Yes, it went up to 1.6 RR. We took out the London high, right? And that's when we decided to reverse. So that would have been another partial as well. So netting you around insane profits for the day, right? That's the beauty of this strategy, guys. It's so mechanical that it requires no effort. You can come at any time of the day, look for this setup, or just put trading view notifications whenever a lower high is swept, and you can start monitoring the price from there onwards. So let's move on to the last example, and then I'm going to end the video. All right, guys, so here is the last example, and this happened on 28 October, actually 29 October, and we had like 3 setups, if I'm not wrong, today on this days, right? So you can see during Asia session, right, we had a high over here, we had a low over here, we had a low over here, but notice what happened here. We engineered a low down around this area, right? So we have a low, and notice what price did. We swept out that low, right? And then we closed bullish. Again, sellers getting absorbed. There's no momentum to the downside. Big buy limit order that pushed the price way far up, even here. But that's when we closed bullish, right? And then you would have taken a long position right away, right? Not looking for a market structure shift, blah, 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 right? And then you could have seen you have 1 to 2, or you could have targeted these fractal equal highs up here. So on the lower time frame, these would be equal highs. So that trade would have given you 4.75 risk reward ratio. Very simple stuff. Now, if I go up here, I'm looking for liquidity sweep. So we had a high, right? And notice what happened here. If I zoom in a bit, we had a high. We swept that high, and this candle closed bearish. So you would have taken another short position. That would have been a London session trade, right? And you would put your stop around this area, right? And then you would go for 1 to 2, and that didn't hit the full TP. It hit 1 to 1.5, but you could have secured one partial at 1 to 1, and you would end the day profitable. But then the best setup presented itself. So we had a high up around this area, right? And notice what happened. We went with this candle, swept the high. Buyers were not in control anymore, and huge selling came in. There was a big sell limit order that pushed the price way far down, and we closed bearish, indicating selling pressure. Don't hate me for this, but I like to say this word because there's a logic behind that, all right? So that's when you're going to take your short position, right? You're going to put your stop right above the high, and let's see if it hit 1 to 1. Okay, so 1 to 1 is hit somewhere around here, so you would be safe. And then for our target, well, you can see how this trade played out. That's when you would have gotten like 1 to 10 risk reward. That's what I was talking about. Now, it's not going to happen every day, but when that happens, you can capitalize on that. Now, the risk management for this strategy is very dynamic. You could have trailed your stop loss if needs to be, but personally, I'm not seeing any clear draw on liquidity around here except the Asia low over here. So Asia low, which is equal lows down there. Now, you could have targeted this as well. That would have fucking netted you 18 risk reward ratio. Can you believe this strategy, guys? I'm not making this shit up. And then again, of course, during the PM session, you had another setup. We swept the high, we closed bearish, and you can see the result, right? So this strategy, I don't know. I'm going to probably delete it after 48 hours. I don't know, bro. This is super fucking powerful. So, but then again, you can just go 1 to 2, keep things simple. Don't chase big numbers. But that's it, guys. Thank you for watching. If you're interested in watching me live trade this strategy and my other strategies as well, every single day, there's a link down in the description, and see if you are a good fit. I'll see you guys in the next one. Take care. Goodbye.